expect a round of applause, so thanks very much. Thank you to everyone for joining us today. It's really kind of what a lovely venue Simon's arranged for us all. I think hopefully we're all going to have a really enjoyable day. I'm going to start by sort of walking you through a little bit of the state of the business as to where we are now. You know, I'm very conscious that lots has changed recently, lots of news, lots of announcements. You're probably wondering what on earth's going on. So I'm going to walk you through a bit of that. There'll be plenty of time throughout the day for Q&A as well. We'll have some mics in the room later on, so you can ask those burning questions if you've got any that you'd like to ask. And equally, we'll have plenty of time as we talk about the product later on that we're going to introduce you today, where you can ask questions too. If you haven't spotted it already, upstairs we've got 3 iMacs, beautifully looked after by 3 different teams. So the stuff we're going to show you today, a lot of it's going to be animated screenshots because we need to make sure you can see it on screen, but it's live upstairs on the mezzanine. So go take a look, go and actually see the live product. It's not just screenshots that you're going to see today. So as I think Simon just said, my name's Matt Mansell. I won't bore you with my potted history. I'm sure some of it will come up on screen at some point as we talk through this. But before we really step into sort of looking at the state of the nation, I suppose, and the state of our industry, I want to just give you a bit of background on Queen's Park Equity. You will all have seen the announcement last year, very exciting. TelcoSwitch gained majority investment from Queen's Park Equity. They're a really great bunch of guys, a fantastic, relatively new private equity firm. I've spent my life working with private equity in different roles, and they're fun to work with, and these guys genuinely are quite innovative actually. So I just wanted to give you a few slides about them. They're a new fund, like I said. Their values actually show in the next slide that you're going to see, where they invest 40% of the profits they're making back into education and not-for-profit entities. They've made 17 investments so far. In fact, let's look at the slide. They've made 17 investments so far over 24 months. They raised a fund of 202 million during the pandemic, in a little over 6 months actually, which speaks volumes to their experience. Over 65 years worth of experience across the guys in the fund. And so far, 6 of those investments have been in tech platforms. So they know what they're doing, and we're proud to have them as part of TelcoSwitch. So this is the team as of right now. So we've got Ivan Martin, our non-exec chairman, fantastic, very experienced chairman in the SaaS space, software as a service space. Obviously you've got me, my history without boring you. I was one of the original guys at Adobe, so Dreamweaver, if anyone's heard of that product, that was me. That was my product actually. If anyone's old enough to remember Quark Express back in the day, one of the first Apple Mac applications, that was me as well. And then more recently GoDaddy. I built a business and sold it into GoDaddy and joined the board for 3 years. And we took that business from around about 200 million valuation all the way up to 1.8 billion actually in its final exit. And then we have Simeon, who's only just joined us. We're yet to announce Simeon, a very experienced CFO in the PE space as well, but also has come from a business called Free Spree, if I remember that off the top of my head, a telecoms kind of Twilio-esque type business. Simeon's just out there, give us a raise of the hand. Do go and chat with him later on. And then obviously we've got Sam and Simon. I'm sure most of you know Sam and Simon. Fantastic guys. Simon's done a good job of today, and Sam sat in the front row here. I'm pretty certain you'll know Sam. Both of them lots of experience in the telco space. I guess the point I'm trying to make here is that as a business, we've now got, if you like, a senior management team that not just has a brilliant heritage in telecoms, but actually hopefully some solid heritage in software. Because there is a big transition going on in our industry right now. We are moving from UCaaS to CPaaS. And I'm going to talk a little bit about that in a minute, but it is a big transition. And to do that, we need to think software, not necessarily think telecoms. So we'll explain some more of that throughout the day. To talk a little bit about where we are now as a business, 450 plus channel partners now. And we're putting more and more of an emphasis on the quality of that channel partner. You know, we've got 450 of them, but we're not chasing another 1,000. What we're chasing is good quality channel partners like yourselves to distribute our product through. And I want to really highlight that. We're going to talk a little bit about Yay later on. You know, you'll know about Queen's Park Equity also acquiring Yay.com, which is a direct business. But it's a direct business with absolutely no sales team and absolutely no marketing team. So that acquisition was about tech, and we'll talk about that a little bit later on. We're managing right now 15.5 million calls are managed every single month and 180,000 active monthly users. So we've got a heck of a tech stack that's running 24/7 and managed 24/7. So, where do we think the market's going? I think today, I'm looking to Simon, I think today we released our annual report for 2022. I think that's in your bags just today. It's a 54-page report actually that's really insightful and I think you'll find really useful when you're talking to your customers. And this really talks about a few of the highlights that I'm going to talk about on screen right now. But I guess working practices with UCaaS in particular really have changed somewhat over the past couple of years because of the pandemic and because of what's happened post-pandemic. It surprised me to read, well, not necessarily surprised me to read, but McKinsey are now saying that 58% of all employees will return to work, but they'll still have one day as hybrid. I'm a firm believer that we're going to return to the office. You know, it's where we innovate best, where we're sat, we look across our pod, we have a chat. Simon, can you take care of this? Sam, can you take care of this? What's happening with that tech issue over there? What are we doing to innovate over here? I'm a firm believer that we're all going back to the office, and I'm sure we've all noticed it on the roads actually from the start of the new year. I've definitely noticed the massive change. But McKinsey are saying we're still going to get one day a week working hybrid, and I think that's quite realistic. What that says to me is that our industry and our innovation is here to continue to be driven by us. I think there's going to be this real need. So there's an expectation of employees to continue to do hybrid working. There's obviously a cost saving in there too. Not sure many businesses are focused on that, but there is a cost saving in terms of office spaces. I know just with my friends working in large corporates, a lot of them say to me, well, I can't go to work actually, I want to go to work, but there's no desk space for me. So I think there's some savings being realised there. And then of course there's the logistical disruption that's driving our business. And it's driving it in so many different ways. It's not just that we can't get on the train to London if we work in London, it's that we can't get on the train because the teachers are going on strike and our children are sat at home. We need to look after our children too. So there's lots of disruption with the economy at the moment that's driving hybrid working. So how does that translate into numbers? These are some extracts that are in those books that you've got. So 65% employees expected to be remote hybrid, and 58% that one day a week that I just mentioned to you a second ago. That in turn continues to drive our market with a compounded annual growth rate of 5.8%. I stress that growth rate is UCaaS. We're going to look at CPaaS in a minute, it's a very different story. But over 5% compounded growth with UCaaS. 74% of businesses are implementing some form of permanent hybrid policy. You know, I think that's pretty obvious now. And 92% of CEOs predict expanded use of collaboration platforms for remote work. And actually there's some really interesting data in that annual report that you'll see. I think one of the things that astounded me actually was all the stats around what's happening actually with CEOs implementing, or CIOs implementing hybrid working. So do make sure you have a read of that. So what happens with CPaaS? Well, a couple of tiny stats here on CPaaS. But the market grew 20% just in 2022. So if you look at the compounded annual growth rate of UCaaS at 5.8% and compounded, so you know a CAGR, so that could be 5.8% over 3 or 4 years, where 1 year is pretty poor, 1 year is pretty exceptional. Whereas just in 1 year with CPaaS, that grew by 20%. And the expected market value of CPaaS is expected to be at 26 billion by 2025. I don't want to teach you guys what CPaaS is, I'm sure you're familiar with it, communication platforms as a service, but the fundamental difference being a platform versus voice-to-voice or chat-to-chat. So APIs that we can integrate with, you know, no code integrations where we click a button to connect with Salesforce, and you know what? We want to connect with Zendesk at the same time. Or complicated skills-based routing, some of which exists in the platform we have today, a lot more exists in the platform that we're going to talk about later on. But there is definitely that move. A lot of that's being driven as well by online sales. You know, more and more people, I read a stat just last night actually, that I think it was something like 90% of B2B businesses that weren't online went online within the first month of the pandemic. It's quite incredible that actually a business that wasn't online had the ability to put themselves online within one month. And I think another stat I read, and this is in your annual report, so I might have the percentage wrong, so you'll have to excuse me, but I think it was something like 78% of customers prefer self-serve now. 70%. There we go, thank you for the correction, James. 70% prefer self-serve, and I found that really quite interesting. So some key drivers to all of this, of course, for us, is the PSTN switch off. You know, by 2025, in theory, there will be no more copper that we can be selling. So we have to be smarter about that. You know, we have to be more intelligent. You know, how do we go grab that low-hanging fruit of all those PSTN switch-offs? So we have to optimise our sales channel, we have to be efficient with our conversions, and we have to automate things. Again, the platform we're going to show you later on will give you the tools to be able to do that, or we hope we're going to give you the tools to be able to do that. So how do we see then all of that translating to tech, translating to what we do and who we are and how we evolve? So let's start by looking at how we think tech exists in our industry today. So if we look at, I'm not sure if this laser works, maybe it does. If we start with the top left there, you all know Asterisk, you all know FreeSwitch, I'm sure you do. You know, open source, shared, common architecture, it's very me too. You know, I can install Asterisk and run Asterisk. I'm quite certain I can go to AWS and get images that will just spin it up for me. Quite sure I can do the same thing with GCS and the same thing with Azure. You know, dead easy, we can put ourselves up oh, we've gone forward. Let me try and go back. There we go. Quite simple to... it's not going to let me do it. Stick. Someone's in that back room. I'll talk about it. So, Asterisk FreeSwitch, we can all install it, we can all do it. If we look over to the right of that grid, and this illustration is in your books if you want to have a look at it later on, then think of the open source plus model. So these are the guys that are taking Asterisk, they're taking FreeSwitch, and they're giving it a little bit of their own sauce. You know, and in some cases, they're turning that into commercially available models that you can go out there and buy, where you'll be sold the dream of, you know, you don't need to be technical, you don't need to understand it, we're just going to give you one install, click that button, and you're going to have a communications platform up and running. And we call those the open source plus model. Then we have the resellers, you know, the BTs, the Avayas, they're taking solutions from BroadSoft, they're taking 3CX, they're taking RingCentral's resold solution, and they're just being resold. You know, there's no value add in what they're doing there. And then we have what I call the old guard. So these are the large, big players, the Vonages, the guys that have got tech stack platforms that are built, you know, 20 years ago and have been innovated over the years, but they're so big now they just can't innovate at pace. We're getting to the stage where technology can now actually be better than the old guard. So we've got these four people: open source plus, and the resellers and the old guard. Introducing, that went well, introducing what we're trying to aim for, the next generation of IP, if you like, that is CPaaS ready. You know, where we're actually thinking APIs from the beginning. The product we're going to show you later on in CallSwitch 1, you know, that product is literally put together on top of our own APIs. Anything we've done with that product, you guys can do. If you wanted to create CallSwitch 1 and call it CallSwitch 2, using our API, you can literally do it. There's nothing that you're going to see in CallSwitch 1 that isn't driven from that API. So it's API first. Platform, API, pretty layer on top. That's the best way to describe it. And using the public cloud. You know, if you're still running Metal today, why? You know, there's absolutely no value in running our own bare metal. None whatsoever. So, you know, there's lots of initiatives there that we're doing with our existing stacks to move that to the cloud, let alone the new product we're going to talk about today. And it has to be horizontally scalable. We have to lose the days of sending a ticket to us, and 72 hours later we'll give you a phone number. We'll only give you a choice in that phone number. You know, just ask for a number in Cheltenham and we're going to give you a number in Cheltenham. You don't get any choice in that matter. Or you write to us and say, actually I've won a new customer, it's 100 users, and we say, oh fantastic, we'll build you a server. You know, and in 3 days' time we might reply to you on a ticket and say, server's built, and you go, well, it's not quite built. You know, those days are long gone. You know, you need to be able to go onto a self-service platform, add 100 users, done. Pick from a million numbers, done. Everything's instant and available, and that's what you get with CallSwitch 1 from us that we're going to show you later on. You know, it's the point of being CPaaS ready. You know, being a communications platform that you can just log on to and build your business from very easily. But that has to scale. So if you want to add 100,000 users this afternoon, I hope one of you does, then you can do that. You should be able to do that. You shouldn't be sitting there waiting for us to come add capacity for you. You should be able to add a 100,000 user customer literally in an afternoon. And I'm going to talk to you a little bit later on about the architecture behind that will allow us to do that with the new product. That's a far more interesting talk than this, I can assure you. And then, of course, we need to relentlessly evolve that platform. So again, we're going to talk about the Yay.com acquisition shortly. But the point of that by Queen's Park Equity was to buy a software business that could sit alongside TelcoSwitch and actually provide TelcoSwitch the power that it really needed, and of course API integration at its core. So I've mentioned Yay. Let's talk about it a little bit. So Yay is a British business. I founded Yay in the first place, then obviously it also got acquired by Queen's Park Equity shortly after their TelcoSwitch acquisition. You know, I've spent a lifetime building Europe's largest privately owned networks, so hopefully I've managed to get some of that right. And you know what? You're running a network, it doesn't always go to plan. Things do go wrong, and occasionally we will have an outage, I'm certain of it. But when we have an outage, we need to be honest and open with you about why that happened. And we will be, we always are. I can tell you guys, it's never the complicated explanation that you might expect. It's quite often that the fuel backup for the generator wasn't provided at the same time as the third fuel backup and the fourth fuel backup and the nth degree backup, and then nobody actually flicked the last switch that they should have switched. You know, it's nearly always something simple in any outage that goes on. But I think for the period that certainly I've owned Yay, we've had a near enough 100% uptime. It's managed to be super resilient. That business is ISO accredited, and that's one of the reasons why it gets that resilience. You know, that 27001 information security accreditation has put so much process into the business, it bores me. You know, when I first discovered that and we decided we were going to become ISO accredited, honestly, I didn't want any part of it. You know, filling out all these process maps as to how the business was going to be run. By the end of it, I loved it. It really added a whole bunch of checks and balances and measures to the business that meant that the fuel tanker did arrive at the right time to top up the backup generator, that it was putting petrol in it, not diesel in it, you know, etc., etc. And that process actually really helps keep the ship running. And then second of all, they've got the 22301 business continuity accreditation, which I think is a bit of a joke in today's age, if I'm perfectly honest, because who hasn't tested real business continuity in the age of COVID? I think we're all used to being able to switch and change very quickly, but as a business we are business continuity accredited, and we do routinely, believe it or not, test actually our employees not being able to get in the office because something nuclear's gone on at the office and they can't come in. We test it every day, I think, because of hybrid working, but the reality is we do some formal testings with that. Talking to some of the tech specs, and these are just a few that the far cleverer people than me managed to extract for me. We're currently handling over 2.5 million API calls a day. That's a significant volume of traffic, just every single day that's coming through the network and being handled beautifully with an average of a 50 millisecond response time, 1/20th of a second. I've done my maths right. 1/20th of a second, we're responding to those API commands. And actually, as a business, Yay is really focused on not just that uptime and availability, but actually the little things like that, because they really do matter. You know, when you're trying to do some ridiculous CDR search that you want to do, you know, to find a call from 6 months ago in amongst 2 million call records, we want you to get that response as quick as you possibly can. It's also handling 180,000 webhooks. You know, webhooks are the way lots of people want to integrate nowadays, far easier than an API integration. 180,000 of those being handled every day. And actually the platform that we call Nebula, that sits below Yay, and we're going to talk to you about that later on, is currently handling 1 million VoIP packets per day. I think that works out something like a peak of 120 to 180,000 packets a second that platform's handling. And that isn't handling it on a single tenant, a single server. It's handling it across a platform, a CPaaS platform. And we're going to show you that later on today. So, Queen's Park have acquired TelcoSwitch, they've acquired Yay. TelcoSwitch had already carried out a number of acquisitions itself. So what does that all look like to you guys? Well, it looks like this. So what we end up with is this fantastic business in TelcoSwitch that you guys can all talk to, work with, day in, day out, with all the people that you know and hopefully are coming to love, many of which are here today. That then sits next to, you know, if you like, its preferred technology partner in Yay. a partner providing a CPaaS platform that we believe is very innovative and not me too. It's not based on Asterix, it's not based on FreeSwitch, it's not an open source plus, it's not a resold solution, it's not the old guard. Actually, it's 100% owned IP on an innovative platform that nobody else can buy. It's exclusive to you guys as partners. It can't be bought through another partner network whatsoever. We then combine that with PBX hosting. They bring us a very good 3CX offering. There still is a need for that and the billing model that goes with it of concurrent calling. They also sit in the business with us over there. We then have SureVoIP. SureVoIP have a very impressive carrier-grade network for us that we are in the process of integrating. So a genuine SS7 interconnect. The old kind of TDM way of being as direct as we can to our peering partners that we're sending your calls on with. The modern equivalent of SS7, as I'm sure some of you know, is the Type B, and it's the Type B that we're going to be working with SureVoIP. So I mean, as we back your calls off into the Exchange network, or into the PSTN as such, we're able to do it through our own connectivity, not just upstream carrier providers, because they're a risk for us. If they have problems, we have problems. I'm sure some of you will have heard of the 1 hour outage that we had 2 or 3 weeks ago now, where one of our upstream partners was predominantly hosted within Azure. It was front page news of the BBC, you couldn't exactly miss it, Azure was offline. You still don't want to be telling your customers we're offline because of Azure. It doesn't matter that it's front page news of the BBC. It really doesn't matter. So putting some more resilience at that layer too is what SureVoIP gives us the ability to do. Xyron, fantastic with numbering. What that really gives us access to, that's key to us, frankly, is mobile numbering. So it allows us to be more flexible with mobile numbering as we go forward. That's becoming increasingly important. We'll talk a little bit, I think, through today about omnichannel. Being able to give your customers mobile numbers that can be WhatsApp, that can be text, that all go into a single chat solution, that when you write back to that chat that's been intelligently routed to the right agent, it's going out to them via WhatsApp because that's how they contacted you, or it's going out to them via text because that's how they wrote into you. But that all starts generally with a mobile number. So we have that ability with Xyron. And then, of course, Call Cabinet. Call Cabinet providing fantastic and market-leading enterprise call recording and sentiment analysis. A fantastic product that's loved by our enterprise customers. So what does that actually mean to you guys? Matt's on the stage waffling on, cocking up the slides. What does it actually mean? Well, 3 things really, I think, is what it means. It means that we've now got the ability to leverage the TelcoSwitch and Yay platform, working alongside each other to a next generation CPaaS platform. And that's where the growth is, guys. We saw that 5% figure in UCaaS. We saw that huge growth just last year in CPaaS. We need to start thinking platform software, no longer just telecoms. Telecoms as a service, for want of a better word, CPaaS. We need to do that to help you avoiding a race to the bottom. It's quite clear that we're always going to be haggled with over minute costs. It's quite clear we're always going to be pressured on traditional telecoms. But we sell a user that comes with all this value add, we don't get so much pressure. So we want to help you to avoid that race to the bottom by evolving those products and giving you something that means that price point can always stay with the high margins that you wish to enjoy. And then finally, of course, we want to enable you to target that PSTN switch off. We've not even seen the tip of the iceberg there. I really believe in the opportunity of the PSTN switch off. I'm sure every one of you is working on some sort of PSTN initiative, but I know for certain that most CIOs are still kind of, it's not really happening to me. I've only just got used to the idea of a VoIP card sitting in my own hosted Asterix box in my server room, and now I've just moved it to the cloud, So that PSTN switch off will drive a lot of opportunity, and it'll also drive a lot of self-serve, low-value opportunity that all add up, actually, and they all add up significantly. So how do we help you to be able to serve that market where you can't send a biz dev in his car to see that customer? How can we make that a viable business for you? And James Lockhart's going to show you some of that a little bit later on. So on that note, you get to get rid of me now, and I hope the slides go a little bit better for the next person. We are going to talk later on about CallSwitch 1. You're going to see it after the break. We're going to walk you through the architecture of CallSwitch 1, and then we're actually going to show it to you. We've got 2 people here to take you through that, Jez and James, and myself is going to talk you through the architecture. But before we do that, it'd be good to hear a few words from Simon on our marketing initiatives. So over to Simon. Thanks.